Hello everyone, it's Jean Shine with Shine Team Realtors. I hope you're having a great day. Well, here it is, the end of January, and I cannot believe how many people are asking me, what is the interest rate going to do in 2022? I have invited an expert. She's been in the business as long or longer than I have, and we've been doing this for 30 plus years. It is amazing all the transformation our interest rates have been doing. So today I have Cyd West, First Community Mortgage, and I am going to have Cyd give you a breakdown. We've discussed it before. She is, as my friend Sean Hannity says, our local expert at interest rates, and she's going to be telling us a little bit about the history and where it's going.
Well, thanks for inviting me in today to talk about interest rates. I hear everybody in my industry use the same catchphrase, I wish my crystal ball were clearer. I certainly wish that I knew what rates exactly we're going to do, but all I can do is look at the indicators and go from experience as to what I think the direction is that we're going. Obviously, the direction that we're going is up. In the last week, we've gone up almost a point. We started the week on conventional loans at 3%, and we ended the week at 3 7/8. So that sounds better than 4, but it's almost 4. VA rates are staying a little bit lower. I have people who are building right now that started last summer, and when I qualified them, they were at 2.25%. And if they were locking in today, their rate would be 3.625%. So that's been a big jump in just 6 months. I do think that it's going to continue to rise a little bit. I know that everyone predicted in the industry that we were going to have 4% rates this year, but I wouldn't be surprised to see 5% rates this year. Now that doesn't sound good when we've heard 2 or 2.5 for a long, long time. But I made loans when rates were 17.5% in the late 70s, early 80s. Mm-hmm. And so I think a 5% rate is amazing. Anything less than 8% is thought to be historically low. And I certainly don't think we're going to get anywhere close to 8%. I remember closing on a loan for myself in about 1986 or 87. And I got an 8.5% rate, and I paid points to get it. And I was so excited because we had not seen rates less than double digits in so long. So in the scope of things, the rates that we're at today are really, really good. And I don't see that they can go anywhere else but up. The Federal Reserve Bank has indicated that they're going to start tapering their buying of bonds, and that's really what drives rates. It's not what the Federal Reserve discount rate is or what banks borrow from each other at what rate. It is all about an appetite for bonds, and this week's Treasury bond auction was sort of a non-event. It was an average demand, and so it didn't do much for rates. What has really caused them to rise so drastically this week has been the news out of the Federal Reserve that they are going to taper, that they're not going to continue to stimulate the economy the way that they were. They are going to watch inflation, which was good news. And our expert that we follow, I subscribe to several publications. Everybody says if you're not closing within the next 21 days, hang on. It probably is going to settle down. In the time between now and when you close, you're probably going to have an opportunity to get a better rate than you can get today. That takes a lot of close watching. And so what I really want to stress to people is look closely at your rate, look at what difference it makes. If you were looking at a $300,000 house, it takes a whole half a point to make $80 difference in your monthly payment. So it's not like the world is ending. I bet people don't know what they do with $80 a month in many cases. So by now, it's not going to get much better, and house prices, I do not think, are going to have a retreat at all. So bye is what I say.
Yes, that's what the market's telling us. If you want to sell your house, it's a great time to sell it because the interest rates are still a little bit low, and your buyers can afford to buy more houses, more dollars in their home. And the other part is that if you're turning to buy, you've got it at the lower rate. As the interest rate goes up, the fewer buyers are going to qualify for your home. It just kind of goes with that. So Cyd, I know we talked about earlier, and I think you've got a chart for me to put on the video, but can you quote any of that? The difference between a 2.5 interest rate, which we had earlier this year, I believe that was our low, wasn't it? Or 2.25?
2.25 was our low without
And
9 points.
2.25 and a 4% interest rate. What's the difference in a house payment and approximately a $300,000 house?
Well, I can't quote you the payment, although I did calculate those
Yeah.
today. But what I can tell you is that every 0.5% that you go up costs about $80. So if you went from 2.5 to 4.5, that's going to be about $320 a month.
That's $325 a month. So you can see why if the interest rate's going up, you need to buy now. If the interest rate's going up, you need to sell now while we have more buyers for your home. You know, it's still a great time. I was in the industry when it was 22%. Yes, I wasn't selling any houses at 22%. Thank goodness we had a lot of VA and FHA assumptions here in Central Texas at a much lower rate that we could sell, and that worked out really well. So if you have any more questions for Cyd or for myself, mine on buying or selling, give us a call. I'm going to post our phone numbers on the video so you'll have them easy to access. And let us know what you're thinking. Do you think it's a good time to buy? Good time to sell? We look forward to hearing from you. Jean Shine, 254-690-4321. With the Shine team, have a great day and we'll see you next time.